this segment, we're going to cover the basic information needed to start the loan application. So, once your loan officer has taken his application, he's going to ask for some basic information from you. So here are some of the things that he might be asking from you. He's going to ask for pay stubs or income statements covering the most recent 30 days. He's going to ask for W-2s, 1099s for the last 2 years, depending on how you're paid. Then, more than likely, they'll be asking for federal tax returns and all schedules covering the last 2 years. And then they're going to ask for bank statements. And this is on your checking and savings accounts. They're going to either ask for either 2 months or 3 months bank statements. And they're going to ask for all pages. So even if there's a page that is blank and it's 11 of 11 and the 11th page is just totally blank, all it has is page number 11 on it, please provide them that, because the underwriter will be asking for the page 11. They don't know it's blank, even though that we know it's probably blank. Please provide that when you're sending that documentation in. And then typically your quarterly statements or yearly statements, or maybe it's monthly statements on your money market investment accounts, IRAs and 401ks. Please provide the most recent statement on that in all pages. Typically they just need the most recent statement to that. They don't need to see multiple statements typically. And then if you have an outstanding mortgage, we're going to want to see the last mortgage statement that was mailed out to you. There's some information on there when we go to do a payoff or collect some information on that we need to get. And then we're also going to need your insurance agent's information. Typically, all we're going to really need is his name, the best phone number to get a hold of him, and an email address, because we're going to be sending him some information to update the insurance binder with the new loss payee clause with your bank's new insurance information. It's called the loss payee clause is what they're putting on there. Okay, so now if you're self-employed, there's a couple extra steps that you're going to need. And it's real simple. Basically, they're going to need a profit and loss in a current balance sheet up to the current date or up to date where you're at in the process for this year. And then they're going to need the last 2 years federal tax returns in all schedules with those for the last 2 years typically, and then all K1s for the last 2 years. So this is the typical initial documentation that your loan officer is going to ask for to get the loan application process started.